S&P broke support right about here. This is really not what we wanted to see today. We wanted to see this gap follow through. But between the speech we had with the ECB and then the Bank of England raising rates, we had a little pressure on the dollar, and that really triggered us today. You can see the 200-day moving average, and we are rejecting that again, just like we did up here. We're not really sure how much further we're going to drop, but we are starting to see more short-term sell signals. Subscribe to the channel, click all notifications if you want updates and alerts that go out in the community channel and you just want to be informed on what stocks to watch the next day. Everything we put out is timely. So you see the 5-10 cross, that was fine when we were getting over it and could possibly negate it, which is what we were looking for. So that's a short-term sell signal. You can't miss it. We're staring right at it. And now you're at this 390 level. Now tomorrow's quad witching and we have $4 trillion in notional value. Bottom line, quad witching, 4 asset classes all expire. What does that mean? It means that you'll have huge volatility in the first hour of the market, and then it will start going sideways, and then you'll have huge volatility at the end of the day. That's pretty much the standard. 4 trillion tomorrow is probably a record for quad witching, and that's because of what we dealt with this. Now, the 22-day moving average, we were hanging in there and riding it up, having some issues here, but not breaking it, just testing. Got over, and now you can see today that we are breaking. I now have another cross where I have a 10-22. That's not really great for me. This was the rally. So this was solidifying the rally when you had that 10-22 back here. Now you're getting the cross over there. I do look at these crosses a lot, and the reason is because it gives you an idea of change in possible trend. This is not what I wanted to see, but this is what I have, and I have to trade what's in front of me. Now we do have the 55 that's curling up, that has not changed, and that really is only about 5 points away. So if we're going to have a problem, this is really good because we'll know really quickly. So you're not going to have another 2% down day without understanding really where we are, right? If we close below this 55, we obviously are going to have some issues after flipping it up here. And we can kind of use that as a demarcation line, but there's some other signs too. These MACD crosses, you see it right here where the signal's crossing the MACD line. You know, they are sediment chips. Again, we were thinking that we might get that reversal yesterday or at least go sideways in here. But instead, with the pressure that is happening globally, we're just seeing it add to the U.S. economy and the U.S. market. And retail sales were actually pretty bad. And so were manufacturing numbers today from the Philly Fed Index and from the Empire State Manufacturing. So there was really nothing great in that report. Jobless claims were up a little bit, but you know, it is what it is. I mean, I don't see them fixing the labor market. So you have to watch this 390 tomorrow. Usually you do hit a wall. That wall right now looks like it's going to be 390. Now, there are some stocks with some interesting development. So there is an article out on Netflix, and that article clearly states that they are having to return money because they cannot get to a level where it's worthwhile for the ad revenue. It's interesting because we sold down on that. We actually did fairly well trading this one today on the short side in the trading community. And really what I like about this is they came out with a statement. Now, their statement was, we're very happy with the way things are going. And I think that's pretty interesting. Like if you were going to dispel that or discuss what happened, you would get into detail. But the fact that they're stating that means that I really want to watch what's going on here. So just so we're clear, this is the bar when they issued that statement. This is the reversal. What I like about this is you never touch the low again. And then you started going sideways and banging your head right against that position. Now, I did not expect a lot today, but I find this interesting. So I want to see tomorrow, do we get some support? Do people come out and start supporting the stock? Do we start seeing investment banks come out and reiterate the ad revenue? You just had a company come out, geez, what was it, about 2-3 days ago and put a $400 target price on this. So it should be interesting to see how the investment banks defend their position tomorrow. Now, it might not be ready for tomorrow. It might be ready for the next day or the next day. Maybe form a bar in here and then flip that bar, and then maybe we can use that as our stop. You know, maybe a couple days from now. But I would still have this on your radar because I don't know what kind of statements are going to come out tomorrow. Now, this is one that I bought, and candidly, I still have a position in it, and I am down in that position right now. But I want to just walk through this. So we're seeing a lot of these kinds of names, and today was just very simply not the day for anything to go up. We're seeing these huge bases, and these bases are going to go one of two ways. They're either going to lift or they're just going to roll right back down. Right now, I know that's not prophetic, but there's some signs here. We've crossed back over the 200-day moving average, and you can start seeing that the slope of the line is actually starting to change. And that's what you want to see. You're starting to finally see it lift higher. And this is the first time we've actually had that line starting to lift higher and start getting a upward sloping angle since we broke it back here in January. So it's definitely something that I would have on my radar, but there's a little bit more here. While we have the death cross back here where the 55 broke the 200, right here we're starting to develop a golden cross. This on the heels of a buy recommendation today by an investment bank, and I would not rule this out. Now, that doesn't mean you're going straight up, but this is very simple to watch tomorrow. You can see your level very clearly. See if you form a little flag in here and maybe continue. Perhaps it's going to have to be after quad witching. But I do like this, and it's definitely on my radar tomorrow. NVIDIA, the action was obviously disappointing for today, and this is your first close below the 200. You know, I don't see this as a complete breakdown on the day. Obviously, it's much weaker than we thought, but you closed up here and you gapped down and started your day here. So you're gapping down about $5 on the day. Now, if you think about that, you gap down about $5 on the day. So between the open and close today, you moved $2. So you basically had a 1% move once we were open. Okay. And I think that that's kind of poignant. So why didn't we close at the lows of the day? I mean, we saw a lot of other names close at the low of the day. We did not see this close at the low of the day. So I think that there's something to that, and I want to pay attention to what's going on here. Now, there's a lot of work that has to go in here, right? But we didn't make a lower low close. We held right in on the 10-day moving average. Unlike the NASDAQ, the 22 did not break. Now, that doesn't mean that it doesn't happen, but for now, it's got better relative strength than the underlying index. Now, if you take a look at VWAP, tried to get over, failed, came back down. NASDAQ took out lows. We did not take out lows. What did we do? We held our support line, flipped VWAP again, came back down, tested end of the day, could not break. So again, I've got a gap in here. No one ever knows really how quad witching is going to play out, but you have some very simple levels to be looking at here and seeing how we're going to act. And we're going to have to watch these levels very carefully. But I do like what I'm seeing here. Of course, I wish it closed above the 200-day moving average, but this is what I have, and I have to trade what I have. It's not about what I want to happen. It's about what is happening, and that gives us Apple. So here's a very clearly defined level that I was leaning towards the fact that you were never going to wind up ever breaking. And here you are breaking it within 6.5 hours after me thinking it's not going to happen. So that's the bottom line here. I can make all the plans that I want in the world, but if the market does something completely different, I have two solutions. I can either go with what they do differently, or what I could do is just stick with my ego and just say, it shouldn't be doing this. One makes me money. The other one does not. So kind of a left shoulder, right head, right shoulder. I was hoping it was going to inverse and be turn into an inverse head and shoulders. That's not really what I'm setting up here for. So I'm going to have to watch this level extremely close tomorrow and just see how we act here. But I'd like to hold in here at this 135, but this is really very nasty. And if you look on the day, what got me about this was there was no gap like we had on Netflix or on NVIDIA, right? There was no huge gap down. This was basically opening flat and then just sold down all day long with very little buying in it whatsoever. And that is somewhat troubling. And it also puts the S&P in a precarious position. But if you take a look at the NASDAQ on the day, go to the 15-minute in a moment, we broke our doji. We have closed below the 55-day moving average, which to me means you need to let this whole thing settle itself out now. That's a pretty bad close. And quite frankly, I'm surprised that it happened that fast in a day. If you were going to do it, You had all the opportunity to do it yesterday. I really think that between the Bank of England statements and Lagarde and ECB, it just really set the whole market off. And you can see that even here with UUP, which is a bullish fund for the US dollar. And you can just see the rally here where the dollar was up over 1% between their comments and what they did to their monetary policy over there. So that added to the strife. On top of that, we had a situation with the VIX, and it actually looked like we were going to implode. We got down to that 21.12, but now we're reversing again. So we're really kind of wedged in here on that. But there's some parts to here that just really are not adding up, because the dollar's rising and they're still buying yield. They're still buying the 10-year. The 10-year closed at 3.45. So as it drops, that means people are buying bonds. If you look at TLT on the day, it was actually up. So when you start to see things like this, you want to pay attention to it. This is something we have in the newsletter. If you don't get the newsletter, there is a link below. If you are interested in joining the trading community, there is a link up here in the top right. Simply click on it and you will be added to the wait list. Everybody have a great evening. Trade to win.